Hi, I'm Todd Poor, a RockStar Realtor in the Dallas-Fort Worth area. I pride myself on providing the best service to my clients, and there's no other place that I'd rather live, work, and start a family than DFW. I offer a lot of value that other agents don't. One thing that sets me apart is that I offer an upfront inspection with my equipment. This allows me to forecast any repairs or problems before my clients submit an offer. It's all about transparency and ensuring that my clients have all the information they need to make informed decisions. I offer free repairs and I can remodel a home very cheap but high quality. I also have a transaction coordinator for double checking all my paperwork to ensure everything goes smoothly. I also teach a first-time homebuyer class once a month. So if you're looking to buy or sell a home, give me a call today. Let's work together to find your dream home or get the best price on your property. And this is my home in Uptown Dallas. I remodeled everything myself. Welcome to our first time homebuyer presentation. We're thrilled to have you here. We want to make this an interactive and informative session. So throughout the presentation, we encourage you to ask questions as we'll be taking breaks to address them. But don't worry, we also have a dedicated Q&A session in the middle and at the end. So please utilize the chat. Some people may ask questions that you didn't know you wanted asked, or you could put your questions in there. But all in all, today is a celebration because we believe that each and every one of you has the potential to be living in your dream home in the near future. You know, like the dream home that you played with as a kid with Ken and Barbie. Would anybody actually really want a life-size Barbie house? If you guys want to say in the chat, whether it's a month, 6 months, or even 2 years from now, the journey to home ownership starts here. We genuinely believe that it's never too early to start planning and preparing for this exciting milestone. That's why we're here today, to build a roadmap to success when you're ready to make the big step. To get started, we highly recommend scheduling a quick and free call. If you want to do an in-person meeting, we can do that. Here's toddpoorrealty.com/book. I put that in the chat. So grab a pen and paper, take some notes, and like I said, don't forget to utilize the chat. So as you embark on this journey, keep your focus on the excitement you feel. You're in very good hands. I know you guys are very vulnerable. This is a huge investment, but you're in very good hands. I work all day, every day. Me and Blake do. We take this very seriously. Homeownership has the power to change lives, offering more stability, a stronger connection to the community, and a profound sense of pride and accomplishment. We understand that you may not know all the details of home buying process right now, and that's perfectly fine. Our role is to guide you through each step, ensuring you have a clear understanding of the process while you concentrate on your ultimate goal. So take some time to think about what you want, what you need, and everything that's going to be in your future home. Consider who will be by your side, helping you achieve this goal. And remember, we are here to be your trusted experts, assisting you with all the finer details along the way. Exciting times lie ahead, and we can't wait to be part of this journey. Build your knowledge in your team when it comes to buying your first home. Seeking out information about home ownership and the home buying process is the first step. Throughout this presentation, like I said, we encourage you to click on the chat icon, ask any questions, or I think some people actually responded, yeah, a French chateau Barbie house. So they want Barbie houses. We'll be addressing your inquiries both halfway through and at the end of the presentation. We believe that proactive communication is key, so feel free to share your thoughts and concern. Remember, it's never too early to start discussing your goals with Blake and myself. By doing so, we can provide you with personalized advice that will set you up for success and potentially save you a significant amount of money when you're ready to buy. To kickstart the conversation, I put it in the chat, toddpoorrealty.com/book. If you need help with credit, loans, finding exactly what you're looking for, rest assured, we're here to support you every step of the way. And your dream of home ownership can become a reality. We're excited to be part of this journey. So let's get started and make your home ownership dreams come true. This was a big rumor for a while. I think it's still a rumor, but why the market's not crashing? Because people are saying this, people are saying that. They've been saying it for years that the market's going to crash. Mortgage standards are nothing like they were in 2008. One of the biggest factors in the last housing crash was loose lending practices. Almost anyone could receive a mortgage with no money down. Now standards are much stricter and buyers are better qualified. That led to lots of foreclosures. Prices are not accelerating out of control. In a normal market, the average home appreciates by 3.5% year over year. Prices have risen a little more than that, and now they're coming back to normal, but the difference isn't huge. Home values are currently rising at a healthy and sustainable rate. We still have a low supply of homes and tons of new construction homes, but still a low supply of homes, which keeps the price up. And then, the interest rates have kind of kept a lot of people out of the market too. We don't have a surplus of homes on the market. Before the 2008 crash, we had way too many homes for sale. Now we're in a shortage, basically. Increasing wages are keeping homes affordable. While home prices have been increasing, wages have been keeping pace. The job market's good. Mortgage rates are still low from a historical perspective, so it's still relatively affordable to purchase a home. And I think it was 1980, interest rates were at 19%, which is insane. Homeowners have tons of equity. During the last crash, most homeowners didn't have much equity. When prices dipped, many of these people had to enter foreclosure. Now homeowners have tons of equity. So if the prices fall, our market will be okay. And I'll go back to this page. We're getting started, and this is going to be recorded too. So if you want to link to this video, just let me know after. You can text the number that's been keeping you updated. But yeah, this is how you book a call. toddpoorrealty.com/book. You go choose the day and then the time, whatever works for you. It can be a really quick call just to get you headed in the right direction. Okay. This is likely the biggest investment of your life. It's a great opportunity to build generational wealth for your family and the future of your family. Are you guys concerned, stressed out, intimidated, anxious, uncertain? As a first-time homebuyer, guess what? You're going to feel a lot of emotions. You may be asking, will I get approved? Will I get that Barbie house? Maybe you didn't get the first house you wanted, or it's been a month and you still haven't found the perfect house. You may be intimidated like David and Goliath in this crazy market, which is turning from a seller's to a buyer's, but it actually seems like it's a seller's and a buyer's market almost right now. Buyer's market means there are more buyers than sellers, which makes it easier to buy, or vice versa. You may be anxious or uncertain. You may have to wait 3 or more days to see if your offer was accepted. I even get stressed out in these crazy situations. Here's my incredible team. I'm Todd Poor with TD Realty. I've been in the real estate business for around 15 years now. I do have a background in building homes. I also started a tiny home business in Midland for the oil field and I employed only addicts, alcoholics, and people with felonies. I am 6 years sober from alcohol, and I had top producer. I need to change that. Top producer July 2022, February 2023, in August 2023. Thousands of homes sold together. Yeah, so I get it done. Nicole's my transaction coordinator. She keeps all my contracts in perfect order, so I can't make mistakes. Not a whole lot of agents have one of these. She goes through and double checks everything. And then Tanika Donnell, my broker, I don't know how she handles everything, but she does. She's incredible. And drum roll, please, my expert loan officer that goes above and beyond for my buyers and myself. He saved a lot of deals where the other side messed up a lot of stuff. I mean, we've been in some crazy things with other buyers and other sellers that we had to go in and patch up and get everything running right again. I don't get paid a dime for anything that we do together. There's no kickbacks or anything like that. And if you're buying, the seller pays me anyway. You're not ever going to give me a dime for anything. Here's some of my client reviews. We're moving in. As you can see, I never pressure my clients into anything. It's actually cost me a lot of money in the long run because I do a pre-inspection. I have all the equipment to do a pre-inspection. When we look at the home and you like it, I record a video of the home, record all of its defects, exactly how much it's probably going to cost to fix it. I do repairs myself a lot of the time for free. And then I have connections to everything, countertops, flooring, HVAC systems, just extremely cheap. And that's some of my equipment that I use. We're getting there. And here's Kristen. She used Blake and myself as well. We all became very good friends, as we do with most of my clients, so we can build a lifelong, successful relationship for the future. She and her husband put reviews all over the place. They cooked my dinner a month ago. We take turns sending each other gifts. She sends really good cookies. And you guys are going to have to step up your cookie game if you want to work with me. But we got a 2,200 square foot, 3-bed, 2-bath, new construction home for $305,000. All right. Moving on. The steps to home ownership. Like I said before, a million times, it's never too early to talk to Blake and myself about what you need to do to set yourself up to save a ton of money when you get to the buying point. You can schedule a quick 10-minute call, video call, in-person meeting with Blake and myself. Click on the chat, toddpoorrealty.com/book. And then you can talk to Blake about getting a pre-approval to buy a home. And the second, schedule a mortgage planning session with our senior loan officer. He's about to take over, but you would still schedule it through toddpoorrealty.com/book. Get pre-approved. Getting pre-approved for a mortgage is truly the first step that you should take if you're serious about buying a home. First-time home buyers, however, are often intimidated by the amount of work that it can take to get approved and end up shuffling this important step to the end of their to-do list. We lose so many buyers because they can't get their paperwork together. They never start it. Some people think it's too early to worry about. It's a huge, costly mistake that you guys should take seriously because, 90% of our clients never get a home because they just never start on the paperwork. They never knew. It's not my clients, but people from the webinar and some of my clients. We have to keep reminding them that we need them to get their paperwork together, and it just almost never happens. But I can't stop thinking about you, Blake. So I'm going to turn it over to you.
Hey, thank you, Todd. I do appreciate that. And thank you very much for the kind words. And guys, he's spot on with the pre-approval. It shows doing the work up front shows that you're serious about buying a home, and sellers like to see that. And during the pre-approval process, I will look into the first-time homebuyer qualifications for you and see what kind of programs that we can get for you. And once we get you qualified for those programs and get you pre-approved, you get to the fun stuff, and that is house hunting with Todd. You get to go look. Do you want a split bedroom design? Do you want like a shotgun kitchen? Do you want an open concept? Do you want 2-story, 1-story, big front yard, big backyard? And once you find the exact house that you like, the exact house that you want to put an offer in, you're already pre-approved and you get to submit an offer. And lucky for you, you've got Todd on your team to negotiate some terms. Once the terms are agreed upon by you, the buyer, and the seller, you go under contract. And once you're under contract, you agree on a down payment and the purchase price and title and all that fun stuff. Get all that ironed out. Well, this is when we start to finalize the financing. Takes about 30 days to get the appraisal and inspections and all that fun stuff done. But you already did all your work ahead of time and got pre-approved. So this is simple for you. We're going to ask for a few documents here and there. Once that 30 days is ready to go, once that 30 days passes, you get to close and move in. So you go sign a bunch of paperwork, and then you get to move in and enjoy your life after making that great investment. So it sounds like a lot, but you got a good team with Todd and myself getting that going and taking the step to come to this webinar. We do thank you for that because we do like our clients to be educated on what they're getting into. And here's some really costly mistakes that we're gonna help you avoid. Number one is ignoring the first-time home buyer incentive program. So what is a down payment assistance program? Well, first of all, it is specific to your region. So it is county specific, not city specific. And each county has what's called an AMI, an average median income. And what that does is it dictates how much you can get and how much you can make to get the down payment assistance program. So it does depend on your income. There are income caps on there. We'll get a little bit more into that later. Now, down payment assistance programs do come in two forms. One is a forgivable second mortgage. And what that means is they give you a certain percentage for the down payment. And as long as you live in the house for 3 years, you do not have to pay it back. So it is forgivable at that point in time. All the debt is forgiven after you live in the home 3 years. If you were to sell or refinance within those 3 years, you would have to pay the down payment assistance back. And it decreases the longer you're in the home. And the second form is a grant, which they just give you the money. And they do want you to live in the home, but you don't have to pay the grant back, which we like to go that route, of course. So how do they work? Well, Fannie Mae and Freddie Mac have their programs through Home Ready and Home Possible. And then with FHA, actually with all these, with FHA, that's a government loan, and it's a great government loan. And I use that in tandem with TSHAC a lot, the Texas State Affordable Housing Commission. They have really great competitive programs for the down payment assistance. So here's an example. Anita wants to buy a home. The purchase price of the new home is $300,000. Now, I got her approved on an FHA, so that's a minimum of 3.5% down payment, which comes out to $10,500. Now, FHA upfront mortgage insurance is 1.75% of the total loan amount, which makes it 294,566, and we can roll that upfront cost into the loan amount. That's the only closing cost we can do that with on a purchase. Now I got to approve with T-Shack on the incentive for 5% of the total loan amount. So from the state, she is getting $14,728. Now, what's great about that is now her total down payment is covered by the incentive with $4,228 left over for closing costs. That could be for title, that could be for escrows, that could be for origination. Whatever money is left over goes right into your closing costs. So it's not only down payment assistance. If I can get you approved for more than what you have to put down, you get a little bit more to help out. So it's really, really a good deal.
Hey, I was just going to try to explain it a little slower, I guess. So the minimum down payment for the FHA is 3.5%. So you have your $10,500 is going to be your down payment. But then the incentive can be 5% of the total amount. So that's down payment assistance. So the state can give you the 14,728. So you basically don't have to pay the down payment now, but you have $4,000 left over for closing costs. And so just an example, I recently had a client that it was exactly 300,000 for the house, and I got them down to 290, which was a really good deal. So anyway, she paid the FHA 3.5%. She got the full down payment assistance. And also we did what's called seller concessions. I put in an offer of 290,000, but I wrote the offer for 300,000. So I gave them a loan for 300,000, and then they gave us back $10,000. So she had all, if that makes sense, the loans for 300,000, then they gave us back $10,000 at the end. She ended up not paying anything for the down payment, closing costs, and she got her first month's mortgage paid for as well. So it can be incredible if you live in the house for your primary residence for 3 years. You don't have to pay it back. You don't have to pay that.
Yeah, I remember that deal. She got a really nice condo, as a matter of fact, and she got her earnest money back at closing. So essentially, she got paid to buy a home. Of course, we'd like to do that with everybody as best we can. So there are 4 types of mortgages. Number 1 is a conventional. You heard me mention Fannie Mae and Freddie Mac earlier. Those are the two entities that create the guidelines for the conventional loans. Number 2 is the FHA. Now, this is a government insured loan. And for each loan that's insured by the government, there is an upfront cost. Every single one, there's an upfront cost. I mentioned with the FHA, it's the upfront mortgage insurance, but we can roll that into the loan. Number 3 is the USDA, and this one is another government insured loan, and it is area specific. It is a 0 down payment loan, but because it's area specific, you have to purchase the home within a rural area. This loan is designed to help the smaller cities grow and flourish. So that's why it's 0% down. It is government insured. There is an upfront cost on that. Number 4 is the VA, and this is only for qualified veterans in active duty military. There is an upfront fee depending on the first or second use. It depends on the amount. Are there any veterans in the webinar tonight?
Yeah, it would be awesome if there was, for sure. But
well, If so, thank you for your service. We do appreciate it. This is VAs are a great deal for our veterans, and they deserve it. Now, with these 4 loans, 4 types of mortgages, the requirements may vary depending on the lender, depending on the bank. They might need different paperwork and different things. So definitely keep that in mind. But that's pretty much the overview of the types of mortgages. So each one of those mortgages, we are going to ask for some documents, from certain documents. Number 1 is a driver's license or identification card and a social security card. We do need to know who you are, and we need to know that you are who you say you are. We do need a residential address for the past 2 years, every single place you've lived for the past 2 years. Now, an employment history for the past 2 years. We need the name and address of each employer for the past 2 years, whether it's 1 or 15. We do need all those. We will ask for 2 months of pay stubs and bank statements for your checking or savings. We will ask for the past 2 years of W-2s. And then for self-employed, we will ask for copies of the most recent tax returns. We will need 2 years of that. But that's mainly for self-employed people. That's how we determine the income. And then, of course, if there's any additional income, child support payments, social security benefits, spousal maintenance, anything like that, we do want to include that in the file because it shows more income and strengthens the file for you. Can definitely help with the pre-approval. So FHA loan is a Federal Housing Administration loan. The FHA loan provides mortgage insurance on loans made by FHA approved lenders throughout the USA, aka me. I love FHA loans. They're a great deal. So here's some benefits of an FHA loan. It's a low 3.5% down payment with a 580 credit score. And you can have a credit score as low as 500 with 10% down. Now, keep in mind that these are rock bottom credit scores. We can get it done with these credit scores, but it's not going to be the best deal for you. So what we want to do is get your credit score as high as possible within the time frame of your purchase. The higher the credit score, the lower the interest rate, the better the deal. There is easy refinancing with an FHA Streamline. They do have lower mortgage rates. They do have higher DTI ratios that are accepted. Who knows what DTI is? I know you do, Todd. Feel free to use the chat. Anyone?
Yeah.
Debt to income. There we go. That's right. It is debt to income. And real quick on that, that's basically your debts, your credit cards, car payments, student loans, stuff like that, divided by your monthly income, which I will calculate both of those. And we get the DTI ratios. Now, another benefit to FHA is you can choose between 15 or 30-year fixed rate or adjustable rate term mortgages. We are not in an adjustable rate term market for primary property purchases. Those are more for like investors and stuff like that. So if you'd like me to look into it, I can and give you some numbers, but right now fixed rate is your friend. Let's see, down payment assistance programs or grants are accepted. Like I said, I use T-Shack in tandem with the FHA loans, and then the seller can pay closing costs up to 6%. That is huge. On the $300,000 purchase that we talked about earlier, the seller could have given up to $18,000 on that. Those are the seller concessions. So very helpful, very useful for negotiations and getting the deal done.
For sure.
So a conventional loan. A conventional loan is a home buyer's loan that is not offered or secured by a government entity. It is available through or guaranteed by a private lender or the 2 government-sponsored enterprises, Fannie Mae and Freddie Mac. And they give us the guidelines for the conventional loans. All right, FHA versus conventional. The minimum down payment for an FHA, like I said earlier, is 3.5%, and conventional for the first-time homebuyer programs is 3%. Minimum credit score for FHA is 580. For conventional, it is 620. But again, those are rock bottom scores, and we want those scores as high as possible. That way you're getting the best deal. Minimum debt to income ratio with FHA is 55, so a little bit more leeway there. And conventional, it is 46. So the loan limits actually went up this year. This says loan limit for 2022, but these figures are for 2024. So for FHA, the loan limit is 498,257, and conventional, it is 766,000. So income limit. Well, the government and Fannie Mae and Freddie Mac, they want you to make as much money as possible. That way they can, lend you more, and they know that it's going to get paid back. So these income limits are with the down payment assistance programs. And these figures are from Dallas County. So with an FHA on a single family home, the income limit is 128,160. And with conventional, for a single family home, it is 82,160. No, those are both with the down payment assistance. So minimum out-of-pocket contribution for an FHA is 3.5%, and conventional, it is 3%. And both of those can be gift funds, grants, or the forgivable second mortgage that we talked about earlier.
Hey, I just wanted to remind everybody to utilize the chat. Ask us any questions you may have. We're going to answer some questions here shortly. And yeah, anything, even if it's not related to this. And yeah, remember, you can book a call at toddpoolrealty.com/book. I put that in the chat. We can do credit repair, every type of loan. We can do long-term credit repair, or I can just give you advice to boost your credit up real quick. But yeah, back over to you, Blake.
All right. So what you can and can't use for down payment and closing cost. You can use your checking and savings accounts. And like we said earlier, we will need the financial statements. The financial statements are required for those. You can use your 401k or retirement accounts. But with those, terms of withdrawal will be required. We don't always have 100% access to those funds. So we do need to see the terms of withdrawal to make sure that we're not pulling out too much and you're not getting penalized or anything. You can use gifts from family members. We will need financial statements from the donor. Whoever is going to give you let's say someone wants to give you $5,000 to help with your down payment. We would need to see it in their bank account and leaving the bank account. And that's as simple as printing out a transaction history. We're able to do it that way. And we can use stocks, bonds, or cash. Financial statements are required. But when we say cash, it's not cold hard cash. You can't show up to the to closing with a duffel bag with all your cash to close and throw it down on the table. Say, all right, I'm ready to buy a home. It does need to be wired from your bank to the title company or in a cashier's check. So things you cannot use another loan or credit card for your down payment and closing costs. And number 3, you cannot use undocumented cash. We need to know where it comes from. And then like Western Union isn't documented cash. We need to see it coming, out of your bank account.
Reminder, if you guys want to ask questions, we haven't really gotten any questions. So yeah, ask away in the chat.
I guess that means we're just explaining everything so great.
You are.
Buyer's eligibility based off underwriter review. Number one, your ability to repay the loan. It's employment verification. That's that 2 years of W-2s and employers. Your total income, how much you're making each month, your monthly debts, and then which are your credit cards, car payments, student loans, stuff like that. And then your proposed monthly payment. And that all factors into the DTI, which we spoke about earlier, the debt to income ratio. Number two is your willingness to repay the loan. So we do look at your credit report and see what that says. We look at the payment history of previous loans. We look at rent, bills, and et cetera, whatever shows up on that credit report. And then what is the use of the property? Are you moving into it? Are you looking to rent it out? Are you buying it for your kid that's going off to college and going to rent it out to, his buddies? Are you moving mom and dad next door? It all factors in to the willingness to repay the loan. And then number three is the collateral. Is the property eligible for the loan? Well, the appraisal determines that. It determines the value. If you agree on a $300,000 home and the appraisal comes back at $275,000, well, we need to determine what's going on there, and how we approach getting that home for you. So those are the three things.
All right, we're getting a few questions now.
All right, I love questions.
Well, I'll just answer the investment real quick. Buying a home from an investment aspect. Yeah, I help tons of investors. Actually, today with my biggest investor, we went to Oak Point, Little Elm, up to a house in Salina, over to 2 houses in McKinney, and we're putting offers on 2 of them. But I help him to buy really good properties that are going to appreciate a lot and get the most amount of rent at the same time. We help lots of investors.
So let me chime in on that. Yeah, Todd is great with investors. He gets you exactly what you need and sets you up to really make some money off of that and create that wealth. On my end, there are a couple different loan options for that. There is like a conventional loan is actually really good for the investment. Typically on investments, it's 20% down. So that eliminates mortgage insurance at that point in time. And then there is another loan program that I have. It's called a DSCR, the debt service coverage ratio, and it qualifies the home. It qualifies the loan based on what the property will produce income wise. It's not based on your personal income. So that's a very good way to get into it that way.
We're getting a lot of questions now.
Good.
My wife is on a student's visa, but currently on OPT and working, whereas I am on a work visa. And then I think we are both employed, the same guy. And then he said, is it possible for us to buy a house on the visa? My wife is on a student's visa, but currently on OPT and working, whereas I am on a work visa.
That is a very, very good question. Yes, you are. Now, what it will depend on is when the visas need to be renewed and the eligibility to be renewed, which that it boils down to what type of visa it is and the expiration date on it. So if you're needing to renew those within 6 months of buying the home, we would have to get with I think it's the immigration and just get an approval from them. There's certain documentation that's escaping my mind right now, but we had I did a loan earlier this year with the same exact scenario. But yeah, great question. Book that call with Todd so he can find out your goals and then send you over to me and we can get a little bit more in depth on that for you.
Yeah, everyone's situation is different. That's a complicated situation. So it'd be best to talk one-on-one about that one for sure. Okay, so now I have how do student loans affect the loan approval process?
That's a great question. So that is also going to be program specific. So the guidelines are a little bit different depending on the loan. So if you are in an income-based repayment program that says you need to pay a certain amount a month, that is what I use for a liability, which factors into your DTI. If you're not in that, depending on the program, there are formulas that I have to use. Like with an FHA, it's I use 0.5% of the total amount owed as your monthly payment. So if you owe, and I'm just throwing numbers out there, if you owe $100,000 in student loans, and we're on an FHA, I have to count $500 as your monthly payment on there. That's how that works. But with proper documentation, we can show that your payment is zero and it doesn't affect your DTI. Serena, book that call. Let's talk about it. Let's see where you're at on that. See what we need to do to get you approved with that student loan. It's absolutely doable. Absolutely doable. So let's book that call 100%.
What if I don't have up to 2 years of employment?
So it was that's situation specific. I did a refinance earlier last year with a woman that was a stay-at-home mother for 7 years. And she had only had 1 year of employment up to the point of refinance. So what we did is we accounted for the gap. There was a letter of explanation. Hey, I was a stay-at-home mom. And then we got the 2 years prior to that gap. So that was her situation. It depends on your situation on how we approach that. But generally, any gap longer than 6 months, we can do that.
If I'm getting personal loans from friends and family, can I request them to transfer the amounts to my account? And what evidence do I need to have with me as a source of money?
Okay, so that's a great question, by the way, a great question. So if that money is being deposited into your account, we have to source the funds. So we would need to see the money going into your account and out of their account, transaction history. Now, doing it that way, it's a lot of documentation that we need to find. That's a ton of documentation. So depending on your time frame and when they deposit it into your account, there's a thing called seasoning the funds. If the money has been in your account for 2 months, the funds are considered seasoned. So if your brother wants to help you out and he puts $5,000 in your account, you leave it in there for 2 months, we do not have to source those funds because it's in there, right? So there are a couple different ways to do that. I highly suggest booking the call. Let's get on the phone. Let's figure out how to tackle that situation. Because if you have a lot of people putting in $3,000 or $5,000 or $10,000 here and there, those become what are considered large deposits, and we have to source large deposits. Large deposits are typically 1% of the purchase price, depending on the loan program. So, but 1% is a good rule of thumb on that.
Hey,
But that's a really good question.
We're gonna have to move forward in a minute, but can you explain the income limit for down payment assistance? I have to run downstairs. My dog's whining. It'll be 2 seconds.
Sure, I sure can. So the income limit, like I said before, it is based on the county. So and it's based on the area median income. So what they do is they take an average of everybody's like salaries and income, and whatever the middle is, that is the income limit. So the income limit for a conventional in Dallas County is $82,160 for the conventional loan. So if if you make, 90,000, that you don't qualify for the DPA at that point in time because it's above that 82. At least with a conventional, of course, we'd look at FHA at that point in time. But it is area specific. So that's Dallas. But when you get to other counties, the income limit changes. It'll grow if the county makes more money, has more money coming in. The income limit will shrink. So if you go to like Jacksboro or Wise County, their income limits are going to be different. I just chose Dallas because it's central to what we have, and most of the counties around DFW have the same income limits as Dallas.
Okay. Man, we're just getting so many questions. Let's let's move on and then come back to these questions just in a few minutes.
Yeah. The next one is the Section 8. So we'll just
if you guys want to keep asking questions, we'll get to them here in shortly. But mistake number 2 is not getting a pre-approval. We already went over that.
Yeah, we already talked about it a little bit. Let's hit on it a little bit more. Because just to kind of reiterate.
Okay. Well,
not getting a pre-approval. So loan pre-qualification helps you determine how much you can afford to spend on a home based on 3 factors. Your credit. So your credit score. What does your credit report say about your payments and your total debts? Number 2 is your income, your employment history and income calculation, which I'll do with the pay stubs that you provide. And number 3 is your assets, money used on your down payment and closing costs. So pre-qualification can help you do quite a few things, actually. It can help you determine what house you qualify for. You don't want to get into contract with a $350,000 home when you're only qualified for $300,000. You stand to lose money that way, and Todd and I aren't in the business of losing you money. That's not what we want to do. So we want to get you pre-qualified first, and it increases your bargaining power when negotiating with the seller. It lets the seller know that you've done your due diligence, you've put forth the effort. And you're ready to go. You're serious about it. You're not wasting anybody's time. And we let them know, because I will provide Todd with a pre-qualification letter, call it a commitment letter, and it shows all the things that you did to get pre-qualified for that specific home. And I'll give that to Todd. He submits that with the offer. It also estimates your monthly payment and total investment, so you know what you're getting into. You know what you're going to be paying for that specific home. And then it helps you identify which loan product will fulfill your needs. It helps me identify, which loan product will fulfill your needs. Do we need to go FHA? Do we need to go conventional? Do we need to go some non-conventional terms to get you in the home? I got a whole slew of programs, so we can pick and choose and figure out which deal is the best for you, but we need that pre-qualification first.
Yeah, so I need a pre-qualification too, so we can't put in an offer without a pre-qualification. And I've had people that want to do that, and it's like, you got to get pre-qualified really quick. Oh, well, that'll take 2 seconds on rocketmortgage.com, and you're definitely not getting the same kind of quality as if you go with Blake, because he's not just gonna say, here you go, 350 grand. He's gonna break everything down on your monthly payments, add everything in there, and make sure you can actually afford what you're getting. Kind of like well, I can't think of the word, but it does increase your bargaining power when negotiating with the seller. Unlike most lenders, we give them a pre-qualification for how much the house costs. Instead of, say, a house is $350, a lot of lenders will just give you whatever you're approved. So $400,000. Well, when I turn in that pre-qualification, they're going to see that you can afford a lot more. Financial advisor is what I was trying to say about Blake. He's going to get down to all the nitty gritty and explain everything, unlike clicking a button. But it takes a little time to get pre-qualified for a loan. And the worst thing you can do is go start looking at $450,000 houses, and then you finally get pre-approved and you're only approved for $350,000 houses. It's happened a lot of times, and it really sucks because you're not getting what you thought you were getting.
Absolutely. Absolutely.
Which brings us to mistake number 3, using your bank.
Bank penalties are expensive. We've all seen those. We've all seen those little hits that we get, the monthly hits, and they add up. They add up. So, and I mean, that's just bank penalties are expensive. So most banks will charge an origination / discount point, and what that means that is in reference to interest rate. So I get you qualified for like 6.5% on your loan, and it doesn't cost you anything. If you wanted to buy points, we call those discount points, and you can buy the rate down. Most banks will say, well, we can give you 6.5% like Blake, but it's going to cost you, 1/4% or 0.5%, because that's how they make their money. It's not just interest. In large banks, you're just one of thousands of clients. To them, you're just a number. The teller that you see all the time when you go to deposit your checks and money into your account, they're not going to be the ones doing your loan. It's going to be a loan officer that you've never met. I have Wells Fargo managing or servicing my loan, my mortgage, and I've never talked to the same person twice. Not once have I talked to the same person twice. And it's frustrating. Large banks typically have stricter guidelines that will not cater to specific situations outside their general box. If you don't fit nice and perfectly into their box, then they don't want to work with you. They don't want to figure out the situations. They don't want to make the phone calls. I'm actually saving a deal right now that Bank of America dropped the ball on. All they had to do was make a couple phone calls to get the deal done to an HOA, the person they're talking to already. And they just didn't. They just gave up on the loan. Large banks may not offer down payment assistance programs. Again, they don't like to go the extra mile. They don't like to put forth extra work. In my experience, that's not what big banks like to do. You're just a number. If they don't get your loan, then in their eyes, they'll just be another one behind you. And it's unfortunate. It really is.
Yeah. So what I can have to say is, your home bank doesn't have to disclose what they make on your loan. You may pay more than you need to if you don't shop aggressively. So if you're already stuck and you're like, I'm using my bank, I would definitely recommend to go through the little bit of extra work with all your documents and check with Blake as well and see what he can offer you compared to them. And that was a question we had. And then you have 30 days to check with multiple lenders, right, Blake, for your hard inquiries? Are you there?
Yes. Yeah, absolutely. It's 45 days. You can have up to 5 lenders, like pull your credit without it getting hit. There'll be the inquiries on there, but they don't hurt your credit. Like each one doesn't hurt your credit, because that essentially would be penalizing you for shopping around and trying to find the best deal. And that's not fair. That's not fair to you as the buyer.
Yeah, I would highly recommend compare with Blake. A fraction of a percentage can cost sometimes tens of thousands down the road for just a little bit of extra work. They may not work with first-time home buyer grants, and some of them need immaculate credit. Moving on, buying directly from a builder. Oh, here we go. Are you?
Well, the truth about buying straight from a builder, closing cost assistance can be bait for higher interest rates, which could cost you more in the long run. So yeah, the deal looks good right now, and they're giving you these incentives, but remember, this is generally a 30-year agreement. So if the interest rate's higher, you're going to be paying more throughout the life of the loan. And the biggest one, and I can't speak highly enough about him. The realtor works for you, and the sales agent works for the builder. A realtor shows up with you to find you the home that you want. The sales agent works for the builder. Their job is to fill the home with whoever comes through the door. So it's a matter of intent. What is their intent? And you got Todd on your team, so he's going to find you that home that you want, that you choose, and make sure that you get it
for free.
Yeah, and that's the thing too. Just to put in there real quick, like, you don't pay Todd and I. We don't get paid by you, and we don't get paid until you're in the home and closed. So we're fully invested in getting you in that home that you choose.
Yeah. So, like he was saying, a realtor representing your interests will help make sure you're aware of what's included in the base price and what's extra. I actually just closed on a brand new construction home. They walked through it. They said, "We love it. We'll take it." And then I looked around and I said, "No, well, the ceilings need to be fixed in the master bedroom. They did a really bad job on the drywall." And then there was no garage door opener. And I said, "Are you guys going to give us a garage door opener?" They said, "Well, we usually don't." Well, that needs to be part of the deal too. So it's free to have a realtor represent you through the whole transaction. If you just go straight in there and say you don't have a realtor, then you don't have any say really on the contracts, the repairs. You can ask them to repair certain things, but a lot of it's not in writing. A lot of it can be verbal. And I've seen this neighborhood where a few people didn't use realtors. They were promised a garage door, and it was like 3 houses didn't have a garage door for over a month, which is completely insane.
Yeah, it is.
Like I said before, I can build with my own 2 hands, and I know tons of builders. So what is the quality of their construction, their contracts? How familiar are you with the real estate contract? Do you know what to look for to make sure you're receiving all the benefits you're supposed to receive? Are you aware of any hidden fees or community fees? Real estate agent is an expert in the industry that will provide guidance to the real estate transaction. If you're buying new construction, listen to this. Register if they ask you to register or sign anything, put you have a realtor. You want to make sure you have someone looking out for your best interests. Tell them on your very first visit that you're already working with a realtor. The price won't change. Nothing will change. But if sometimes they'll have you sign up, and then if you come back and tell them you have a realtor, they'll say, no, you were supposed to fill it in the first time. Now you have no one representing you. So it's a huge deal. And if we're going to build a custom house, I know tons of people that we can build custom houses. You can go design your own house and everything with different builders. I can take you to see their houses they built, things like that. But I go and inspect it right when they put all the studs up, right when they're doing all the electrical, right when they put all the walls in, all these separate inspections. I go check on them. Realtors and knowledgeable what to look for and final walkthroughs. Okay, I think we've covered that. Mistake number 5, skipping a home inspection. Which new builders will tell you you don't need an inspection. They do their own inspection. But you want to go ahead and pay the extra $400 to have a real inspector come and get all this stuff written down that's wrong with the house and make them fix it. And I've seen so many things like this go wrong because the builder will miss things. The inspector will almost always find a few small things, if not a big thing that's wrong with the house. In some houses, they buy them as is, so you can't make repairs to the house. Well, you still need to get an inspector, so you'll see what your future cost could be to repair it. Always get an inspector is basically what I'm saying. This house right here, I don't think you would need an inspector. I think you would just need a bulldozer. You purchase a house unaware of deal breakers, you lose your negotiating power. So another part of getting it inspected is, say you get it inspected, you get an option period. And those number of days, which is usually 3 to 7 days, after they accept the contract, you have, let's say 5 days is what we put on the contract. You have 5 days and you have the option to back out of the contract and get your earnest money back, which is usually 1% of the sale price. And if there's something really bad wrong, you say, we want that fixed, or you can give us $5,000 and we can do that. And they can either fix it or just, a lot of the times they'll just give you money and you can fix it yourself. And that's part of the negotiating. You risk inheriting non-structural safety issues such as mold, radon, and carbon monoxide. You miss having a forecast of future repair costs, which is something that I can go over with you. You're oblivious to illegal no-code additions and remodels. When people, they enclose the back porch, make it into another room, you're supposed to have a permit to do those things. And if you didn't have a permit and you start claiming it when you sell the home and everything, you can get fined for those things. And electrical, you need to make sure everything's up to code for sure. And a lot of people don't know about radon. Radon is actually the second leading cause of lung cancer in the United States. And it can be formed when, say, there's a crack in the foundation, or anywhere where the dirt's really mixed kind of with the concrete, that can form radon, and it goes up through your floors and stuff. And there's no way to tell if you have radon or not, unless you have, someone test for radon. And mistake 6, choosing the wrong realtor. Hopefully you don't do that. 1 second, sorry. Here we go. Experience and communication is key. Communication is huge in every kind of relationship, but buying a house, communication is key. Whether you're looking to buy or sell a property, it's extremely important to have the right real estate agent working for you. Your top priority is to choose someone that you're comfortable with, working with, and at the same time has the right credentials and experience. Ultimately, you need to find someone you can trust. So what are some things that you should look for before hiring a realtor? Number 1, areas of expertise. There are a lot of really good realtors, and it's not hard to get a list of good realtors that have great credentials, but what you need may not be their expertise. The starting point is establishing what type of buyer you are. For example, are you an investor, a a regular home buyer selling in its state, or are you a first-time home buyer? Knowing what type of service you need, then you can critique realtors on their skill set. A lot of realtors, you can ask them about down payment assistance and how all this works, and they'll have no idea. I'm being serious. Have they done the time? A realtor with a few years in the industry should have accumulated the experience to remain steely under pressure. Uncle Joe that just got his license a month ago can bring a lot of mistakes that can cost you tons of money. There's a lot of mistakes to be made in this business, and it's all about learning from them and then moving forward. I learn something new every day. So you should ask questions about the tough times and how they dealt with them, as well as how long they've been in the industry and their current role as a realtor. Is a realtor too busy? You know, some realtors, busy is good. Some realtors, busy is bad. The key is to find the realtor with an optimum volume of clients so they're happy to communicate with you when you need them. Use a local realtor. Don't waste time with a realtor who's not working in an area anywhere near where you're looking. I mentioned earlier the need for experience and knowing the area is very, very important. Select your realtor who has a good track record where you're interested. Verify if they work alone or as a team. This is another huge thing. It's good to work with a realtor that has a team, but you should make sure it works for you. Everything works for you as well. Like I said, I have Blake. You don't have to use, sorry, Blake, but you have to use Blake. I work with every lender, but I like Blake. But then I have my own transaction coordinator that double checks all of my paperwork. I have an awesome broker. I have a good title person or different multiple title people. Yeah, so you should make sure they have a team. A lot of agents don't. Most agents don't have a transaction coordinator. It should be understood up front that we're all going for the same goal. Know how they communicate. You need to know if your realtor understands the type of communication you both prefer. Set expectations on how often you need to be updated, what type of communication it should be, and see if they can meet your needs. Check if they can provide references, sites, past clients, reputation. And I can put a link to all my review page later on. Learn what they have to say. The best realtors are the ones who know how to listen and understand your situation. You'll know their mindset by how they ask you questions and what things they tell you. And my motto is the most successful transactions are the ones that build lifelong relationships. And I still have a great relationship with basically every client that I've had. And I just bought a 7-night private condo in Colorado for my client that we just closed on. I'm always giving really good gifts to basically all my clients. This is the demographics of Dallas. Of course, the really busy part or the really bad part's the airport. We can look at demographics. This is a soil map. I don't think there's probably any other agents that look at soil maps to see how your foundation will be in the future. Maybe some do. I like to use niche.com to see how the schools, the nightlife, good for family and diversity. I like to use that. Hi, I'm Todd Poor, a RockStar Realtor in the Dallas-Fort Worth area. I pride myself on providing the best service to my clients, and there's no other place that I'd rather live, work, and start a family than DFW. I offer a lot of value that other agents don't. One thing that sets me apart is that I offer an upfront inspection with my equipment. This allows me to forecast any repairs or problems before my clients submit an offer. It's all about transparency and ensuring that my clients have all the information they need to make informed decisions. I offer free repairs and I can remodel a home very cheap but high quality. I also have a transaction coordinator for double checking all my paperwork to ensure everything goes smoothly. I also teach a first-time homebuyer class once a month. So if you're looking to buy or sell a home, give me a call today. Let's work together to find your dream home or get the best price on your property. And this is my home in Uptown Dallas. I remodeled everything myself.